Now, the product that we sell has a market. Demand, supply, price is called the market. Now, so how demand, supply interact with each other? They interact with each other very differently, say from your car market, or from your gold market, for example, or from your stock market. So before we talk about any investment principles, we need to first understand how our market reacts. Now, so that will only have about, I think, 5, 6 slides. 5, 6 slides. I still need about 10 minutes to go through that. So that will be the background, the context. So when we talk about, okay, or buy this, you need to look at what are the pointers you need to look at and all that. So the overall context behind will be the characteristics of the market, right? So now within the characteristics of the market, the main factors will be the cycle, right? The cycle is very fluid nowadays. In the past, we say 12-year cycle, follow the stock market or behind the stock market. And 5, 6 years ago, you would have heard me talking about the Joseph cycle, which is the 7-year cycle, right? 7 years of good times, 7 years of bad times, and all that. But nowadays, all these patterns are all broken. So now you don't hear me talking about 7-year cycle anymore. So later on, when I mention cycle, so I'm not going to use any traditional model. I'm going to show you how cycle happens. And another very important factor within the market characteristics. This one nobody has one. This one nobody has like COE, like gold and all that. They don't have this kind of characteristics. That is, for real estate investors or for real estate salespersons, or even homeowners, there is no way for us to forecast demand. Meaning we can't do a forecast. Example, we can't do a forecast on how many babies are born in 2023. At 2063, then we're going to require how many houses and all that. Now it's very difficult to make that kind of forecast. But first, let me quickly settle here. What is the meaning of demand? Demand means a price offer. Somebody give you a price offer, that means he's making a demand, right? Now, so if you have a listing, let's say 3 months, nobody offer you, means what? Means there's no demand for your listing. All right. So now, if you ask yourself, okay, today is Saturday. Let's say you do resale HDB. You say, today is Saturday, so I expect some people to come and view my listing. You also can't predict how many will come, and then out of the how many viewers, who will give you a price offer. So this is called every time when people invest now and all that. So at the back of our mind, when we give the advisor, we should have the knowledge of the real estate characteristics. All right, like for example, if somebody asks me, hey, what happened really? There is a war very near or in Asia. So would that be an opportunity for me to invest? Let me tell you, the answer is I don't know, right? Okay, I don't know. Okay, so after 10 minutes where we discuss all these market characteristics, and then we'll go into the common investment strategies, common theories, principles, all right, and a little bit of sharing of experience. In fact, last month somebody commented that too many examples. Can you don't show so many examples? Okay. So it's very difficult to please everybody. Some say, give me some examples so that I can understand. All right. Some people say too many examples. Okay, training methodology. Basically, later I have one case study that is on GIC portfolio. the GIC portfolio, actually, this particular investment is called Sunway Property. All right, so including Sunway Lagoon, the Pyramid Hotel, and the whole chunk of properties. How in year 2000, how GIC went in, take up 48% of ownership share, and then start to revamp the entire property. Now, like I mentioned a few times this morning, just the past 10 minutes, this is investment principles. Now, so whether you invest in a big property or you invest in a small property, the principles are the same, right? So when later on, when I come to the GIC example, the principle behind is actually opportunistic investment, opportunistic investing, opportunistic. Now, these kind of opportunities don't happen every other years. This kind of opportunity happen probably 10, 12 years or maybe even longer. So are we going to see this type of opportunistic investing? I think the answer is yes. All right. So in fact, later I will have some examples to show you that people are already going to JB to start to buy again from people who bought 12 years ago, who have been losing money. All right. So on a smaller scale, opportunistic investing is this kind of 1-2 apartments. There are many Singaporeans, when they go over to JB, they can buy more than 10 at one go. All right. Now, so the case study, being a CBD class, of course, I don't choose the GIC example, because there are people who say, oh, the GIC example is too big, and all. No, but this is a case study. It can be very big, but the principle behind are the same. All right. So of course, later I will explain by pointers. What do I mean by opportunity? All right. Okay. So then later we will just briefly look at master plan. It's going to expire very soon. I think in about half a year's time, we are going to see a new master plan. All right. So now, if you have any questions to ask me, in fact, any questions, because whenever I come to LMA, the pattern is a very interesting one. People in the